Well, one of the stories I like to tell is one of my clients has done well in brokerage and makes money, and people come to him from time to time and say, "Hey, pal, you should put some money into this deal. Where this is what we're going to do. We're going to buy this and do that and rent that and build this." And so this guy had more than a dozen interests in different projects. And you know what I mean by this, but for your audience, they would have an LP interest, a limited partnership interest, which means they put money in, they can only lose what they put in, they have no other liability, but they're not decision makers in the project.
Hello, hello. Ginny Bolling here with Pivotal REI, which is the real estate investing for podcast forecast. I have with me today Blaine Strickland, and he is a mover and shaker in our area. He has been involved in real estate for how many years, Blaine?
Let's call it 4 decades.
Yep, yep. Same here. There's not many of us.
Mm-hmm.
So I welcome you, and you are a pivotal person to so many people, and truly, actually, a local legend as well, because you've trained a lot of people, you've influenced a lot of lives, you've really made a difference with not only raising the level of professionalism, I would say, but bettering people's lives. And so I thank you for that. And I'm going to go ahead and read your bio,
Okay.
or pretty much read it, go over it, and then you tell me what we maybe should know in addition to that, if you would. Blaine is a 40-year veteran of the commercial real estate industry. He's held positions in national companies and companies he founded himself. He worked as a producer, manager, broker, consultant, coach, and instructor. Blaine's experiences, along with his thirst to learn, enable him to bring broad perspective to the issues he addresses. And I can vouch for that. I've done training under him, and he's definitely able to help people zero in. The mentors he had in his early years of his career had a profound effect on him and encouraged him to shift his focus to coaching and consulting. Since 2012, he's moved away from transactions and towards coaching fellow CRE professionals. He's assisted in local, regional, and national companies with developing and evolving their businesses. He's an author and um, coach and does business plans, crafting, executing, hiring plans, all of that consulting that you may need. And so I would highly recommend that you talk to him if you're needing to make any improvements to either your own performance or your company's performance. Um, and he's been the author of the Thrive and Adapt, and there's another one. You only have Thrive and Adapt, I think, on this list here. What's the third one?
Well, the third one is called Evolve, moving from broker to
Evolve.
buyer, which is the course that you took.
Yes, yes, yes. Okay. So, welcome, Blaine. Thank you for coming on the podcast. You're here in
Happy,
Orlando too.
yep, happy to be here.
Yes. And another thing is you have in your family three generations of CCIMs, the highest credential recognized among commercial brokerage in America, right?
That's right. My father, who is still alive, 93 years old, got his designation in 1984 after he retired from the Air Force. And then I got mine in 1987. And then my son, Hunter, got his in 2018. So we're the first family to have three generations of designees.
That's amazing. That's amazing. We celebrated you at an event about 2, 3 months ago, I guess, which was wonderful. Really, it's good to see. And because of people like you, I think there's more and more events that has raised awareness for the level of professionalism out there for people that go ahead and take that training and become experts in their field. And coaching is a big part of that. That's really, I can tell you, when I decided I needed to get into investing for myself. When a light bulb finally came on for me, that I shouldn't be just a consultant and help everybody else, that I needed to be doing it for me and my family as well. Um, I realized that there's you don't know it all just because you've been in the business 40 years. There's no way that you necessarily know how to perceive things as an investor, especially me. When I worked in eminent domain, we used to kind of scoff at speculators that bought property in the way of roadways, right? And we looked at investors and speculators alike. And it wasn't until I became an investor that I went, holy crap, it's a whole different ballgame when you have set criteria that must be met to proceed with a buy. So yes, people like you are very important. So how many people have you coached? Do you have any idea over your lifetime?
Well, let's see. I started in 2012, and 2012 we were still kind of coming out of the fog there of 2008, 2009. So there were a lot of people that were not open to coaching because they couldn't figure out which way was north. And it grew pretty steadily 2012 to 2018, 19 as the great ascension took place. And what I learned in that time frame is that top producers, particularly commercial real estate agents who are oriented toward achieving more and have the opportunity to do that, they need more help on the way up than they do on the way down. So I went from not very busy to very busy from 2012 to about 2019. And I really couldn't guess how many people that I've trained, because some of that occurs on a one-on-one basis, and then some of it occurs in more of a group setting. If you think about it, as an example, I was a CCIM instructor for 17 years, and I think I calculated in that time period, I communicated with about 2,500 students, teaching 4, 5, 6 courses per year. If anyone's taken those courses, the typical attendance is 20, 25, 30, something like that. So 17 years times 5 courses a year times 25 people, you can touch a lot of people in that way. Now that's a formal program where they're earning their designation in terms of me working with them one-on-one on the issues that they deem to be most important. That's a different number. I don't know that I could really guess. But our focus at our company, One More Deal, has always been to work with people one-on-one. So we're not really growth-oriented in the sense of how many people can we help. What we want to do is help the people deeply that we choose to help.
Interesting. That makes a difference too. And so, what do you want your takeaway for the listener to be from this episode?
As I think about it, Ginny, what happened to me was that I spent my first 10 years working for CBRE. I was very active as a commercial real estate agent. Then I got promoted to a profit center manager at CBRE. And when that decade was over, I decided I wanted to be a developer. The last big development project is the one that caused me to move to Orlando in 1998. And it was a significant office tower in downtown Orlando. We finished it in 3 years. When that project was over, the company basically said, look, we're good. We're not going to stay in the development business anymore. And so with that, I decided that I wanted to become a developer, and I wanted to work on the real estate that I understood, not merely what I could afford. So the way I like to talk about it is, I had enough money to buy a duplex, live in half and rent the other half out. But the market that I knew was the 15, 20, $25 million marketplace. And so in order to stay in that marketplace, I needed the capital to be at that level. In other words, instead of taking my $100,000 worth of discretionary income and buying a duplex all by myself, I wanted to raise $5, $10, $15 million so that I could participate in 10, 20, $30 million projects. And that's what led me to becoming a syndicator. And you remember from the course that I made the comment. So I explained in the third book called Evolve, Moving from Broker to Buyer, I explained really from a biographical standpoint how I ended up becoming a syndicator because of that initial desire to focus on a larger strata of the marketplace. And what I would tell all of your listeners is that everybody arrives from a different path to being a syndicator. In other words, you may be a CPA, you may be an attorney, you may be a contractor, you may be an engineer, you may be a lawyer. In my case, I came at it from the brokerage angle. And so when you arrive at the point where you say, gosh, I want to be a syndicator, you might remember from the course that we put on, Jenny, and given that we just finished the Super Bowl, your listeners might remember the X's and O's of football. And when they draw a a play for football, they use O for offense. So they show the 11 players on offense as a different O. So there's 11 O's on a scratch pad, and it shows what each player does during the upcoming play. And the way I like to think about that from a syndication standpoint is that if you're going to be a syndicator, it's your job to staff each one of those positions. So you're going to need to know a leasing agent and an architect and an attorney and a contractor and a public official and a property manager. And so no matter what path you arrive from, in my case, brokerage. So I was like, oh, well, I am the leasing agent. I know how to do that. But I needed an attorney. I needed a contractor. I needed an architect. I needed a civil engineer. And so one of the things that I would say to you is if you're preparing to do your own deals of that size, you need to fill out your team. You're not only the quarterback of the team, but you're the owner of the team. You're the team owner. So you have to put people in all those positions and fill those slots. So if you're working away at a salary job and you're saying, I don't have time for this, I'm an employee, but I want to be a syndicator, one of the things you can do to be ready to be a syndicator is start populating your team. Go meet 1, 2, 3 architects, civil engineers, attorneys, contractors. Go see what they do. Figure out what they're good at. Talk to the bankers and find out what types of projects they like to loan on, so that when you get ready to become a syndicator, you have your team in place, which you will absolutely need. And I think that might be the best takeaway for your audience.
Build your team.
Can't do it without them. You
Well,
can't
not
do
only
everything.
that, but I also like your message of work on what you understand more than what you can afford.
There's a lot of people who've built a great fortune. Many times they start young. I talked to a family probably a year ago, and the father was a EMT firefighter. And so through his 30, 40 years as a firefighter, he found one property, he moved into it and then fixed it up and then sold it and then used that money to buy a duplex. And so he moved the family around. Well, over his 30 years, he collected 40 units. And, hats off. That fantastic. I mean, what an incredible journey to end up with that much real estate, which is a pretty significant legacy. I'm not sure what inheritance you would generate for your family working for 30 years as a firefighter, and I'm not putting that down. But if you supplement that with 40 units, multifamily units, you certainly have made an impact. Well, I'm not against that style, but that isn't the style that I wanted. I didn't have 30 or 40 years. I can't fix anything. I don't know which end of the hammer to hold. I had to work on the real estate that I understood, which was more of a financial engineering, using equity and debt to create results for large capital.
Yes. And so that would be syndications, which are basically just pooling of resources, whether it's skill or money, right? And I think that's like one of the biggest secrets out there, that everyday Joe Public pretty much can get into these syndications. Do you still find it very hard to get that through to people?
I think because people don't know how to do it, they pull back from it. In other words, some people would say, if I want to own real estate, then I'll just buy REIT stock. I'll just go to the stock market and I'll buy shares in a REIT stock, and I'm satisfied with that. This REIT owns 500 multifamily properties. I believe in multifamily. I think that's where we are in America today. These are the types of assets that are going to go up in value. Makes all the sense in the world. I put $10,000 in. It's fungible. I can sell $1 a day. I can buy more. And so in some ways they're like, I'm good. And then of course you have all of the crowd share stuff like Fundrise. You can go in and pick out what kind of real estate you want to buy and how much you want to put in. And so for many people, that is sufficient. They feel like, yeah, I have money in Apple and Home Depot and Disney, and then I have money in gold and silver, and then I have some municipal bonds, and I have some REIT stock. And so if you ask me, I would say I have a diversified portfolio. Nothing wrong with that. 100% works. It's just that the people that want to buy real estate have an interest in having a deeper relationship with the real estate. They want to make the decisions. They want to manage for effectiveness. They want to figure out the timing, and they want to effectively operate closer in, so that if you're buying REIT stock as an example, that's great, but you're paying full retail. You're after everybody else gets your share, then there's a dividend. And if you want to enhance that or put more money at risk, then you need to have a bigger share. You need to be closer in. And for some people, that's what they want.
Yeah, it doesn't necessarily help the people that have high income though, and some of those situations where you need the tax write-offs. That's where syndications really can fill the niche and or the need. But yeah, I think a lot of it is just trying to get that word out there too. So that's part of what I see as my job is to try to educate people on what the options are. And more, instead of just being an operator, I'm looking to be a fund manager as well to be able to work with some of these investment groups where we have operators come present to us and we vet the deals together and bring them to our investors, which is kind of an evolving thing, right? Are you seeing more and more people like the allocators that?
Yeah, I see sort of all phases of it. I see, I'll see, and from my angle, I'll see two or three real estate brokers who've had two or three good years, and they each can put 100 into the pot, and they're trying to figure out what to do, and so they form a very simple joint venture. They buy the real estate together, they make the decisions together, and it can be really as simple as that people merge their money together and went forward. At the other end of the spectrum, you see capital stacks that have 3 and 4 slices to them. Sometimes you see people that have a very specific angle on what they're trying to do. I was talking to someone not long ago that they actually pool their money together just to buy land, and they pay all cash. And so the whole play is you put your money in and you control this large piece of land or a piece that you perceive to have growth. So there's no depreciation at all. And in other words, you're just holding it there's no dividend. You have to raise enough money to pay the taxes every year. And other than that, you just wait for the big play. And so I see a little of all of it.
I bet you do. Yeah, I don't think I could sit there. I'd have to do some entitlement. But maybe some of them do, of course. But yeah, I do know some that do that. But I like the joint ventures too, especially right in your backyard. I personally would like very much it someday to specialize in urban renewal on a grand scale, bringing public-private partnerships. Since I've got that government background and all those contacts, I'd like to see more placemaking, kind of like what you see in Lake Nona and other places where these cities and counties can really help to build community. That's where I'd like to have some involvement over, my next 10 years.
Mm-hmm. Yeah, the public-private partnerships are probably the most complicated slice of commercial real estate because you not only have different types of interest. The public partner has a certain set of goals. The private partner has a different set of goals. And then the uses themselves have different needs as well. So if you mix multifamily together with retail, together with workspace, as an example, you've got 3 different audiences there. So those projects usually take a little more time. They take a lot of expertise. And honestly, sometimes those things just have to season. You sometimes see these projects that don't get off to the greatest start, and it takes time for maybe the retailers to turn over or the people to realize, wow, that wouldn't be so bad living above retail, which I said I never would do. And now it's like, well, actually it's not that bad. And I can walk my dog and get my coffee. And so sometimes those projects take a little bit longer, and they are complicated.
Right. Yeah, I seem to live in complex sometimes. Well, so as far as what you are working on today, is it primarily coaching that you're doing these days, or do you have a course coming up, perhaps?
Well, the bulk of what I do is coaching. So I've earned most of my income from consulting fees now, or coaching fees, if you will. And as you read in the bio, I moved away from transactions. I actually don't really coach that many people in regard to transactions because many times I'm just simply not able to be sort of 911. Blaine, the seller just, refused to sign the extension. What am I going to do? It's like, dude, I don't have the time in my life doesn't work like that so that I can react to those things on Sunday night, which is not negative. It's just that's not the way it worked for me. So I've moved away from transactions. I'm more into consulting. I had many different adjunct professorships. I've written some books. I still do some speaking, and so I like my life. I do a lot of interesting things on a day-to-day basis. I'm kind of at that age and stage where I can choose what I want to do. In regard to this third book, Evolve, moving from broker to buyer, that is not available as a book. It's available as a course. And the reason for that is because the way that the notebook works, as you remember, is when you sign up for the course, whether you take it live or online, it's a workbook. It's an 85-page workbook. And as we work through the material, each chapter has its own worksheet. So the idea is that when you're done, you have the worksheets all filled out and you've taken a giant step forward in terms of what to do next, as opposed to the first two books I wrote, which you can read and go, that sounds good, or I don't really agree with the guy. And it's not really going to probably be life-changing. I think that the Evolve course has an opportunity to really help you see what weaknesses, what deficiencies you have as you begin to become a syndicator, and enable you to create a specific plan to solve those deficiencies and be more potent when the time comes.
Yeah, I agree. And I think that well, it was interesting because we had people at all different levels in the brokerage experience in that group. And I already had gotten into a couple syndications, so I was probably a little more along the path there, but it's enlightening to a lot of people to realize that they can be doing that, and they just so often don't even realize that that's available, really, right?
Well, one of the stories I like to tell is one of my clients has done well in brokerage and makes money, and people come to him from time to time and say, hey, pal, you should put some money into this deal. Where this is what we're going to do. We're going to buy this and do that and rent that and build this. And so this guy had more than a dozen interests in different projects. And you know what I mean by this, but for your audience, they would have an LP interest, a limited partnership interest, which means they put money in, they can only lose what they put in, they have no other liability, but they're not decision makers in the project. And so after investing more than a dozen times in LP interests, where some of them worked and some of them didn't, and sometimes there was a cash call, he was like, I'm not doing that anymore. I'm only going to do it if I have the GP, the general partner, the management slice. And so there's several people that have taken the material that we've created in this course in order to move from LP to GP, or to move from mere investor to decision maker. That changes the risk profile, but it also changes the return profile. And so some people have chosen to gather the information in because they say, well, actually, I have invested in individual projects 15 times. 7 of those worked and 8 of them didn't, and or 2 of them are unknown. And I even tried to get some of my buddies to put money in, and then I became like the de facto, what's going on? It's like, well, call the manager. So once I got to that stage, I figured, I'm just going to be the man. I'm going to put the whole deal together, and I'm going to be in control of the decisions. I'm going to build the business plan and cause it to succeed. So yeah, we get a little of everything in the crowd.
Yeah, and that is partially why I also would like to be a GP in my backyard, but an LP across the country, really. So it makes it easier to be more efficient too. I mean, you can diversify so much better. You can diversify not only geographically, but different asset classes when you are an LP. It's so much easier.
Yeah, I would say, I've said this to some people, is look, if you never decide to be a GP, you will be a much better LP by learning what the GP is supposed to do. So that when you evaluate the opportunity, you're actually looking at it as if you could be the GP, or you understand what the GP decisions are and where the potential risks are in this deal, as opposed to just being one of the 25 people that each puts a slug of cash in and gets one of the LP shares. So it's the same thing that I say to brokers, which is if you want to improve your performance as a broker, become an owner, and then you will learn acutely how to become a better broker, because now you're thinking more like an owner. All of your clients are principals, and now you're thinking like a principal, which makes you a better broker. So even if you only do it once, it still has tremendous overflow benefits.
I agree. I agree. And it's so funny because I belong to the apartment association. And when I go to these events and I serve like on the membership committee or special events committee, and I tell some of these regional managers or maybe property managers, you can be an owner too. They're like, what? Seriously, they're so used to saying, panic button, the owners are coming, get all ready, right?
Hmm.
If they were an
Hmm.
owner, they would approach that so much different.
Yeah. Yeah.
It's very interesting that, and we all have such different perspectives, and you never know till you're in the other person's boots, kind of, as we know, or anyway. But so I want to give you another chance to restate the takeaway, and then we're going to go into the pivotal person question.
Um, yeah, I would say what has made me a valuable coach is that I've played so many roles. I started out just like a street broker. I had a territory. I called on people in that territory. I learned the territory. I began to get a dominant share. Then I became a manager of the commercial real estate platform. So agents reported to me. Then I decided I wanted to become a developer. So I had an opportunity to work with some very large development companies, work on some very large projects, and really see real estate from a completely different perspective. When I started to build my own company, my own properties, then I built my own leasing property management companies. I had to borrow money. I signed personally. And I was able to buy and sell properties as a principal. So I had so many different experiences that when I decided that I wanted to become a coach, I was well suited for that role. I had played many different positions. Again, just reflecting on the Super Bowl a few days ago, many of the coaches started out playing football in high school, and then they played in college, and then they became a graduate assistant, and they moved their way up, and finally they become the head coach. And it's that empathy for the whole process that makes you really powerful when it comes time to be the coach. And so that's where I find myself today. Part of that journey was becoming a principal, saying, I'm going to cross the line. I'm going to become a principal. I want to have that experience. And in my case, that caused me to raise money and so that I could play in the realm that I wanted to. Jenny, as we've had this conversation, I'm kind of reflecting that if you're going to do that, if you're going to go down that path, then I would say, then treat it as a phase or a chapter in your life, because no matter what happens on the first one, something different's going to happen on the second one. And you really want to think about it as an entire chapter, the whole journey of raising money, buying property, hopefully executing the business plan, selling it for profit. That happens occasionally, and sometimes it doesn't. And so it's really a choice that you make in terms of how you want to spend your time as well as how you spend your money.
I have to back you up. What do you mean it happens occasionally? From what I see, it seems like it's more times than not that the business plan is executed, at least to the degree that there's a return on and of money more times than not. You're making it
Well,
sound the reverse.
lived through some downturns. Like if you've been in the business as long as I have, and you've been a principal through the ups and downs, you can do everything right and still be in a situation where out of your control, tenants are failing. If you think about what's happened to all these office building owners and why there's been a turnover of half of the office buildings in America, it's because now the tenants are saying, yeah, we don't need that amount of space. We don't need that remaining term. And so as a result, you're saying, gosh, I counted on that rent to be able to pay dividends to the equity investors and loan payments to the lenders. And when that doesn't exist, then you have to go into other strategies to figure out what to do next. And so even that in my syndication career becomes valuable from doing it again and again. I could make the case that your best syndicator would be someone who has gone through the downturn and therefore thinks protectively about how to fight off the demons when they inevitably come.
Yeah, and that's a good point too, because office is in that stretch, and I'm in my mind, I'm thinking primarily the assets I'm following that are hot, they're trending, and they're performing better anyway. Yes, when you look at the broader market, yeah, there's a lot of stress out there right now too. So,
Well, if you get a degree in real estate or finance and you come at it from that angle, uh, you're always taught to use leverage, that the leveraged internal rate of return is higher than the unleveraged. And I would say, one of the things you might give some thought to based on what you're trying to do is if you can raise $3 million and borrow another $3 million, you might want to give some thought to raising $6 million and doing it all cash, and then adding the leverage when you've reached the status where the property has reached a status where in effect it can cover the debt without much stress. In the deals that I did, I had debt there at the beginning, and as a result, everything had to go right. And sometimes it does, and sometimes it doesn't.
Yeah, there's a lot of people thinking through that more and more now. I can appreciate, yeah, that's definitely a wiser way to go if you can. Um,
Well, again, the process of raising money is the same whether you are going to use debt or not. It just means you have to raise more money. But remember, when you raise more money, you have the ability of saying, listen, this is the business plan that we expect to pursue. But if there is a wiggle and we cannot pursue it exactly or in the same time frame, the good news about all cash is that we always live to fight another day. The worst that can happen is that you don't get a dividend check this month,
well, if you lose the property,
but you won't if you pay all cash.
you won't. Yeah. Well, yeah, if you have to sell for less than what you paid, that's got it. Yeah, I see what you're saying, but that's definitely the lower risk approach for sure. Yeah.
Yeah.
All right. Well, so why don't you tell me as far as the pivotal person and local legend series that we have, is there a particular person or event that brought you to where you are today or that's pushing you towards a particular goal?
It's interesting because when we had this celebration for the three generations, my father, me, and my son, that was not something we really set out to do intentionally. He became a CCIM, and when I saw how valuable it was, I became a CCIM. And then when my son decided to do it, I was like, dude, if you're going to do it while you're young, and this is the time to do it. And then he did it. All of it was in Florida, by the way, and we served as officers in our various chapters in Florida. It just seemed almost like the natural thing to do. The point of that quick story, Ginny, is just that I continue to draw inspiration from both my father and my son. My son is actively involved in transactions, and he's been open-minded to taking a little advice once in a while from dad, and so that has been a really fun relationship for us to work through. And my father, of course, is a grizzled veteran. Always wants to talk about real estate, and we have those. We remember back when and talk about the deals we did and things like that, and that's had a huge impact on me. Fortunately, I've been able to work with some really top producers through the years, and I learn a lot from them. I get the benefit of saying at this point in my coaching career that really I work with almost only top performers, and that constantly exposes me to the best practices. So no matter who I'm working with from a coaching standpoint, I'm able to say, I hear you. Let me show you what the best practice is, and then let's aim toward that. Let's see if we can move in the direction of the best practice. And so I'm very thankful to the top performers that have been very inspiring to me in terms of the things that they've accomplished. I would say locally, a client that has had a huge effect on me is John Crossman. Do you
Really?
know John?
Okay.
Do you know John?
I do.
So John, I tell John, I've told this to his face, that I think he is the best storyteller in the business. Now, I don't mean storyteller like a fish story, like a big whopper story. I just mean the way that he synthesizes information and explains that to the people that he's talking to. It's just magical to listen to him. And he has used that to build several businesses. He built his own brokerage business. When he acted as a broker, he was instrumental in the incredible enlargement of Crossman & Co. And now he's got his own company called Crossmark Services. And interestingly enough, he is now primarily focused on acquiring for his own account. So he has a brokerage team. He has brought several people onto his team, and he's actively involved in making them better at their brokerage responsibilities. But he has also teamed up with capital sources, and he's acquiring for his own account, which is beneficial because sometimes he can put his brokers on those assignments as well. But what a remarkable journey he has had. And whenever John and I see each other, sometimes we're so much alike that we sort of end up completing each other's sentences. And it's just been a great relationship, and I'm very thankful for it. I'm much older than John, but it's been fun to learn from him.
All right. Now, are you nominating him as a legend and a pivotal person, or just one of them, or because
Well,
he has to have influenced a lot of lives now?
if you want to talk about influence, John has really dedicated himself to the plight of real estate education, particularly at the nation's HBCUs, historically Black college and universities. And so he has probably personally spoken at dozens of those schools. He continues to take on interns in a lot of different programs. But his point is that as America has evolved over the last 50, 60 years and commercial real estate has become so prominent as an investment vehicle, it's not very diverse. I can remember when I was at CBRE and we were constantly told we have to increase diversity. And it wasn't that there was racial preference. There was simply no one to hire. There was simply no one that was interested in coming into real estate or had even really knew what that meant. So when you went to the colleges and looked at the classrooms, no diversification. And John's taken that on as a lifetime mission of his, and the progress that he's made in that regard has been really remarkable. So at John's funeral, there'll have to be two funerals, because there'll be a real estate funeral and then there'll be a separate testament to the impact that he's made on the culture at large.
I've heard people talk about that, and I don't know him well enough to have that intimate of understanding of. I've seen him on stage talk about that passion, though.
Yeah, I have employed John to come to my clients and make presentations, and I've heard him make the presentation that's related to, hey, you owe it to yourself to make a donation to these programs so that we can begin to develop these students. I mean, we're just leaving a whole body of students untouched in effect. And so if you were to go to like his YouTube page or something like that, you would see a lot of these presentations that he makes at various he makes it at all colleges, but he makes a special effort to be present and available as a resource to the HBCUs.
Good to know. Good to know. Well, I will definitely get with you. We'll coordinate. You can tell him, or we can tell him that you nominated him either way. But yes, local legend and pivotal person. That it is. Yes.
Yeah.
All right. Well, so tell people how they can reach you.
The easiest way to find me is to work through our website. The name of our company, I got my little shirt on here with the logo. The name of our company is One More, MORE, Deal, One More Deal, DEAL, One More Deal, all one word, .net, not .com, but .net. So if you go to onemoredeal.net, there's information about who we are, what we do, how to reach us, etc. That's the easiest way to do it. If you want to send me an email directly, it's pretty complicated. It's Blaine, BLAINE, at onemoredeal.net.
That's not too complicated, but yeah. And we'll put that in the show notes. But yes, I am so glad that we got a chance to have you come on, and I appreciate that. And I need to get with you to give you your lapel pin. So we'll have to coordinate that, but we'll turn off the recording here for now. But thank you so much for coming on. I really appreciate it.
Happy to do it. Thank you for your support, Ginny. I really appreciate it.